hosted by IIFL Securities Limited. Please stay connected. This call will begin shortly. Thank you. Ladies and gentlemen, good day and welcome to the APL Apollo Tubes Limited Q4 FY21 conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star 10-0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Urvil Bhatt from IIFL Securities Limited. Thank you and over to you, sir.
Good evening, everyone. On behalf of IIFL Securities, I welcome you all to APL Apollo Tubes 4Q FY21 results conference call. On the call today, we have APL Apollo Tubes management team being represented by Mr. Sanjay Gupta, Chairman and MD, Mr. Deepak Goyal, CFO, Mr. Arun Agarwal, COO, and Mr. Anubhav Gupta, CSO. So let's begin the call with the key thoughts from the management. Thereafter, we can open the floor for Q&A session. Over to you, Anubhav, for your opening remarks.
Thanks, Urvil, and thanks, Malika. It's a real pleasure to be here. I welcome everyone on the conference call of APL Apollo for the FY21 results. Like I said, it gives us a pleasure to be here and discuss our performance for the fiscal of FY21, which was one of the most challenging years in our history. At the same time, I am proud to tell you that Team APL Apollo has converted the crisis into an opportunity and delivered the best fiscal year ever. We saw record improvements in our P&L, which was driven by margin expansion, our balance sheet, which was driven by the debt reduction, our cash flows, which was driven by the working capital enhancement. Some of the achievements I want to highlight are, number one, EBITDA growth of 40% for full year and PAT growth of 50% despite flat sales volume. Market share expanded to 50% from 40% in the structural steel tube markets in India. Our net working capital cycle down to 8 days from 25 days as we switched to cash and carry model, and which has been very well accepted in the industry, and we believe that this should continue going forward. This kind of working capital cycle is best in the building material industry as well. Our net debt, which is down by 80% to 1.6 billion INR from 8 billion INR in last 12 months. Our value-added product contribution improved to 57% in FY21 from 45%. Now again, it's a real pleasure to share with you that this journey started 3-4 years ago when our value-added product mix was 40-60. Now it's moving towards 60-40. Our ROC jumped to 26% from 18%, and our ROE jumped to 25% from 21%. The company generated operating cash flow of almost 1,000 crores, 10 billion INR in FY21, and free cash flow generation of around 6 billion INR, which helped us reduce our debt. Then we also started the group simplification process with the announcement of Apollo Tricoat Tubes merger into APL Apollo Tubes. This process was initiated in February of 2021 and is going mostly on track. At the same time, we also demonstrated our commitment to the sustainability and ESG compliance for our organization. I'm glad to share that we roped in one of the Big Four consultants who is helping us with the ESG compliance. Over the next few quarters, you will see that how we are going to comply with the GRI guidelines and how we are going to monitor the ESG compliance for the next 2-3 years. And lastly, what we worked on is a new market creation, which has been the strength for APL Apollo Group towards the high diameter, high thickness tubes, which is one of our most focus areas for the next 4 to 5 years. Specifically on the quarter 4 FY21, a few highlights we like to share is that the quarter 4 had started on a very strong note as the Q3 economy, in Q3 the Indian economy had started to open up. However, the quarterly sales volume was slightly lower than Q3 because in Jan-Feb the markets took some breather after a record momentum what we saw from May of 2020 till December 2020. But after 40-50 days of breather, we had strong momentum which started in month of March, and it continued till early weeks of April as well before the lockdown was initiated again. Our value-added portfolio in quarter 4 was 60%, again similar to what we had in Q3. So this shows that we are on a sustainable path of having 55-60% contribution coming from the value-added products. And our margins were again above 4,500 rupees per ton as the unorganized sector continued to struggle due to raw material supply. So this led to strong pull demand in the industry for products of the branded players, and it kept our margin high. Lastly, on FY22 outlook, we started Q1 with good momentum, but the second wave hit the country very badly, and we witnessed simultaneous lockdowns which were being announced by various state governments. Today, as we speak, it seems the worst is behind us, and the market should start opening in month of June and July. So this gives us some visibility for the rest of FY22. But we are monitoring the situation very closely at the same time as things are changing on daily and weekly basis. That being said, our long-term strategy remains unchanged for the group, which is based on value addition, cost control, innovation, new market creation, and brand equity enhancement. With this strategy, we are confident of sustainable double-digit growth in non-pandemic period with superior net profit growth. With this, we'll finish our opening remarks and we can open the floor for Q&A. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhruv Jain from Ambit Company. Please go ahead.
Hi guys, congratulations on a great set of numbers. Value-added product basket. Now in FY21, we have seen that you have been able to drive this to the targets that you had set out for yourself earlier. So just wanted your thoughts that in the last 2 quarters we've seen volume decline and flattish kind of volume. So as we move to a more value-added kind of product basket, has the growth taken a little bit of hit because of that? And connecting question to that would be that going forward with respect to value-added products, how do you see this changing? Can this 60% go to like 70%? And what actually changed in FY21, at least in the last 2 quarters, that led to a significant spike in the value-added product basket?
Hi Dhruv, good evening. So coming to the first part of your question, that given that our value-added product mix is improving, so does this mean that our overall sales volume is going down? That's not correct, Dhruv, because if you see that when in Q1 FY21, when everyone was hit from the lockdown, in Q2 our company had reported the strongest quarter, which was 480,000 ton of sales volume. And in Q3 we saw the economy opening up and we again did 485,000 ton of sales volume. So we could maintain those record volumes. So right from month of May till December 2020, we had a record momentum. Okay, we increased our market share to 50% from 40%. Our rural sales contribution improved significantly. We were working on the value-added product portfolio at the same time. So it was pretty much expected, Dhruv, that the market should take breather in quarter 4, and it started from mid of January. Right, the distributors who were sitting on a bit of high inventory levels, they wanted to cool down their inventory levels, and like I said, that was pretty much expected. But at the same time, what was happening was that the secondary sales were not impacting because the construction activity in India was still going strong in month of Jan-Feb. Okay. So we had our ears on the ground. We didn't bother much because we knew that once the inventory levels come down to normalized levels, there will be strong demand coming from distributors at the same time. So after a gap of few weeks, we saw that in month of March we had a strong momentum building up, and March was very strong. Okay. So if that breather hadn't come in Jan-Feb, we would have touched again 480,000-490,000 ton kind of volume. With this sales mix, 60-40, it will go to 65-35 also, 70-30 also. We don't see dip in any volume.
Okay, thanks, Anubhav, for this. And, a question with respect to the growth going forward. So, should we assume a mid-teen kind of growth in terms of volumes going forward? I understand that FY22 can be a little bit of hit because of the lockdown, but, on a sustainable 4 or 5 year point of view, should we assume that to be the guidance?
So Dhruv, again, before I answer this question, you had another question when you had raised it around, like what kind of value addition contribution that can come from our company, right? So today we are sitting at 60-40, right? And this didn't happen in 1 year. Okay, it's the hard work which we have been doing for last 4-5 years. We have been innovating. We have been coming out with new sizes. We have been creating new markets, right? So all of this process takes time, right? And we were continuously investing our time, our energy, our money towards those objectives. And then suddenly you saw that in FY21 there is a big jump in the value addition. But if you look at right from FY16, slowly, gradually, we have been able to improve our mix. Like from 40-60, today we are 60-40. It's not a 1 year journey, it's a 5 year journey, which started right in FY15-16 with a lot of planning, a lot of investments, a lot of thought process, and a lot of strategy which came into play as well. So this is like, pretty much sustainable on sustainable basis. This is not 1 year phenomena or 2 year phenomena. This goes with a very, very clear thought process, carved out strategy, which we started in FY15. And on volume growth, see, we were so excited when we had started FY22. That whatever revenue loss, volume loss we witnessed in FY20, we could make out in FY21, in FY22. But again, the country got badly hit. So I guess today, it's difficult to say that what we are going to do in FY22. But what I can tell you is that in non-pandemic years, right, when things are normal, our system is well established, well oiled to deliver high-digit double volume growth. With incremental volume coming from the value-added products, right? So when we say that we are continuously decommoditizing our product portfolio, that journey will continue.
Great. Thanks a lot, Anubhav, and all the best in the future.
Thank you. The next question is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
Yeah, I actually didn't have any question, but I wanted to place on record my appreciation. 1,000 crore of operating cash flow, almost 600 plus crores of free cash, which is adjusted for the minority stake, almost 65 rupees per share of operating cash, and 43-44 of free cash is a remarkable achievement. And I think it has been strategic and not happenstance. So congratulations, Sanjay ji, and to the entire team. And phenomenal across the board on all qualitative parameters, not just quantitative numbers. I think it's a remarkable one. And quality of the disclosure and the level of detail given, again, deserve appreciation. So many congratulations.
Thank you, Bharat bhai. Thank you.
Thank you. The next question is from the line of Devrat Mohta from Capital Group. Please go ahead.
Hi. Thank you so much for your time and congratulations on solid results. I just have one question. So, from our channel checks, we've been hearing of, raw material shortages. Can you just talk through firstly, what are you all doing to, kind of deal with this challenge of procuring raw materials? And secondly, what does this mean for, market share consolidation? Because I'm assuming if you all are finding it tough to source raw materials, smaller competitors will find it a lot harder. Would love to hear your thoughts. Thank you.
Your question is answered.
Yeah. We have a long-term agreement with the steel plants like the Tata Steel and the JSW Steel. And we have a long-term MOU from last 10 to 15 years. So we have no such as a big problem. But no doubt in this time when the country is shortage of steel, we are suddenly difficult to increase our quantity. But whatever commitment we have done with the Tata Steel and the JSW, they are both our main suppliers. We have no difficulty to take the procurement of the raw material. And now we are slowly entering with the small quantity with SAIL and SR also. So I don't think the raw material is a big problem for us.
And what about market share implications from, smaller competitors struggling to gain struggling to gain raw materials? Will your market share go up because of this?
Yeah, no doubt. In the primary steel, the smaller players are getting now badly hit. So they are losing the market shares and the organized and big players are getting more and more market.
Okay. And one follow-up question. Our working capital has improved quite substantially last 1 year. How much of this do you think sustains versus you think, some of it goes back to normal? I know I've asked you this question before, would love to hear your thoughts again though.
Because now we are not going to increase our working capital cycle. Like we saw lockdown हुआ है, तो we have a long-term agreement with the steel plants to उसका हमारा stock level बढ़ जाए. But that we are 100% in control. We don't want to force sale to any single ton of tubes. We as per the demand and our distribution systems, we are supplying the material. We are not any compromise with the payments. Maybe this quarter due to the lockdown, some stock हमारा थोड़ा बढ़ सकता है. But we are trying अगर अभी भी lockdown खुल गया तो we cover it.
Perfect. Thank you so much. All the best.
So there's just one point I want to add here is that, this working capital enhancement, what we have seen, this is not a phenomena that's going to last for only like few quarters. Okay, it is more like it has become a practice for APL Apollo and its clients also, right? So majority of working capital enhancement what we saw is because of the reduction in the debtor days, receivable days.
Correct.
So the kind of additional margin they are making on cash discounts, right? Then we are compensating them against the low inventory levels what they are keeping in their godowns versus what they have to do with other brands, right? And the overall discipline which has come in the industry. Again, I mean, with the second lockdown which took place, that discipline again is in the minds of all the participants, right from the distributor to the retailer to the fabricator, right? So I guess this is a very structural long-term phenomena what we are seeing for ourselves, and as long as it is not forced, right, it is by choice. We think that this is going to be sustainable.
Perfect. Thank you so much. Thanks, Anubhav. Thanks, Sanjay ji.
Thank you, Devraj.
Thank you.
Malika, you there?
Yes, sir. Just give me a minute. The next question is from the line of Madhav Marda from FIL. Please go ahead.
Yeah, so good evening and thank you so much for your time and congrats on very good set of numbers. I just wanted to get your thoughts on a couple of things. The first one was the Raipur expansion. If you could just give us an update in terms of when that plant starts and I think how much of a capacity comes in the first phase of the expansion, and also the kind of product portfolio that we will be doing at Raipur. If you could just give us your thoughts on that.
Madam, now again, due to the corona and lockdown, we are behind by 2 or 3 months, I think so. But we are thinking our first production come out with the Raipur plant in the month of December. And in the first phase, we are close to 0.5 million ton of capacity. And this is totally different product of basket, whatever we have now in our baskets. Like in this, we have going for the bigger sections, 500 square into up to 20 mm for the high-rise buildings, and the color pipe for the decorative tubes. So these are lot of type of new addition, new innovation in this plant. And hopefully we start this plant in the month of December, and in the first phase for Q4 or either Q1 FY22, we are targeting annualized 0.5 million ton capacity we can utilize.
Okay, understood. And the margins, because if these are value-added products, the margins will be better versus our existing portfolio.
Yes, margins are no doubt far better than the existing product, and you also see that in the future in the results, our existing margins are also increasing because our too much we are focusing